Welcome, 9:22 a.m., 6/17/2012. Happy Father's Day, and happy Father's Day to this $48 price target that was here on 6/13. These 1360 weekly puts now, and they expire on the weekly. And I'll be happy to show you that they're in the money, as we know. And basically, we're going to steal the bid. And I'm going to show you that this particular put option is worth noting for the simple fact that you can see that the highs were $48 and they got a low. They marked them down to $28.70. That's wholesale. Okay? Now, based on the austerity packages that are coming out, there's this 1360 put, and you can see that that's in a deflated war zone right there in price. I will be giving the MMTs, index market makers, once again. We just rang that cash register to the upside of the calls, but the calls are inflated. And I will be giving out prices here. The 1360 put, which is above 1 delta in our system. This is called in the money 1360 put. Where did the S&P 500 close? We already know that it closed at 1342.84. And that bull rally with Greece, Ben Bernanke, QE3, all the volatility around the world, doesn't matter, is all factored in what we're going to be doing. And if we gap up tomorrow morning on 12/18, we're going to set prices below the market here, and we're going to steal them bids like we always do. And on the other hand, while you're looking at that put, I will show you how deflated that's a deflated area. But if we gap up, I will be giving lower prices to the entry to my MMTs. Oh yes. Now, let us talk about the 1370 call. That's up and out of the money. Now, this little worm got down to $1.55 on 6/13 as well on this up and out of the money that we are featuring. And yes, it's made a move up to the highs of it closes at 520, and the high was 520, so it closed up toward the highs. And there was 711 contracts traded. Wow. And the low was 330 and the high was 520 on the daily, and it's getting up there and it's getting inflated. So if we gap up tomorrow morning, these are going to go higher in price, and these are going to come down lower in price. So the call side of the 1370 up and out of the money gets inflated in price. I will be given prices rises too, so that when this side of the market, unlike this side as well, this is the side of the market right now that when you travel up and hit resistance levels, and we've already did all of the analysis on the S&P 500 chart. But once again, I will give a reference to our daily platform here, and we already know that 1360 is going to be right up here where this neckline is, right in here. And this is where the major reversals went down in our system, and we shorted that whole freaking move. We got short number one, we got short again over here, and we're long now, and we're going to come up and we're going to hit these upper resistance areas. And by understanding that, should the market gap up tomorrow morning, then that means that these puts gap down to our lower entries, which will make us the lowest entries out there in the world, based on the S&P 500 gapping up and hitting that wall of resistance, which will bring our entries in line there, which will also inflate that 1370 call. There it is, 1370 call up and out of the money. All right, MMTs, this is that 1360 put and that 1370 call. It's a weekly expiration. Index market making.